edition of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your morning your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Babe Ruth, and you'll hit a home run. I mean, a big home run.
Yeah.
And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I don't think I'm going to be doing it tomorrow morning because we have live trading Fridays with Larry Pesavento. You got to come on in. This is a freaky market for sure, and it is definitely helpful to have someone there with you while you're trading. We're going to figure out what's going on with our internet here in just a moment. Got it right here, live trading Fridays. The way this whole thing works is from 9 a.m. to noon Eastern time in our Tiger's Den trading room. What is it, 25th tomorrow? Yeah, 25th tomorrow. We're running. So this is, when you buy the subscription, you get 2 sessions, right? So, you know, obviously it didn't work April 11th, so you're going to be able to go to the next one, the 25th here, tomorrow, and then again, what is that date? I believe the 9th of May as well. All right, let's move on here. Man, so this is a weird market right now, okay? You're up 1.82%. None of this, again, this has been a very news and headline driven kind of market. Not a lot of stuff going on right now. There was some discussion that, what was it? Trump said that they're talking when asked about China, but then he clarified that they didn't necessarily mean China. He's going to speak today as far as I'm aware with the headlines, but we've had this kind of stuff consistently where, you know, there was news that he was supposed to speak at 11 a.m. today, right? And it didn't happen. So I guess now it's at 5. That might not even be the case, so we'll just see what happens. The volume is exceptionally low today on the SPY, right? We still have an hour left. But the idea that we can get somewhere even close to what we did yesterday, I mean, there's going to have to be a lot of action here throughout this next hour. We're going to have Tim Ord on, so definitely stay tuned for that. Take a look at the 10-year. I mean, we're not really budging in a major way. Okay, so the 10-year yield is at 4.3, hasn't really moved that much. 30-year, 4.76. 2-year, 3.7. Dollar isn't moving any major ways, kind of flat, honestly. We're at 0.12%. Your SPY is trading up 1.82%. Your composite trading up 2.33. On that note, with the composite and the Qs really particular, we have to decide to never listen to whatever those analysts at TD Cowen are saying ever again. I don't know what that is, but it has now been 2 times. We call it the first time. They're saying that Microsoft and Amazon are divesting out of data center build, and that has just been false every time, and it has caused sell-offs, not only this past time, but the time prior as well. So I don't know what they have going on there, but you had Amazon and Nvidia reiterate that there's no slowdown in demand for this kind of stuff. Okay, so you have Amazon right now trading up, let's see here, trading up 2.78%. Nvidia has had unbelievable price swings over the past few days. You know, we were very shortly, you know, around like $95, trading at 105 right now, trading up 3% on the day. Quite a massive gap up, and yeah, you know, we're trading kind of in this next gap up here. I still think we have a leg down. You know, your VIX is decreasing a little bit, but you're still right near that kind of upper band that you usually have, right? December you had high of the 28 there, and of course your 29. is interesting that you're getting such massive price swings, meaning like percent-wise. I mean, we can have like 2% days either way in things like the SPY, and your VIX is still somewhat low here. But, you know, we're not in this like kind of settled state. So there's still volatility in here, I think. We'll kind of see what happens with that. It is nice that this is continuing to come down somewhat. But I with this kind of volume, with the just bad headlines that are just not clear at all, you know, I don't like this market whatsoever. It is nice that the cloud companies are being bought. Of course, Nebius itself is doing quite well, up 6.88% right now. So that's a good deal. Of course, they're very big out in Europe. They're you know, renting out a lot of their compute as well, right? The demand's massive for Nebius, as of course Arcady is saying. So definitely be following that. Of course, I like Nebius quite a bit. I just don't like equities really currently. And you know, we've seen days like this already, you know? It's just important to go back with NVIDIA. I mean, look at this chop that you have, right? And honestly, I mean, what will probably end up happening, and we're already starting to see it form, but is really this, again, it's going to be very choppy, but in a much narrower band. You know, we were speaking about that even in December and January, that you could potentially see some stuff like this in the market. And then obviously Tim Ord has shared the same kind of thoughts. You have Bitcoin off 0.24% right now. So weird, I mean, talking about headlines that are just horrible and don't really explain anything. Taking a look at, is this SEP? Yes, this is Cantor Equity Partners. The whole deal with them, this is just a sad kind of deal. You get a lot of people, I know it's up 66% right now, but you have a lot of people who are going to be down, you know, roughly 40% from this point, right? Yeah, they don't even have much data on them at all. So what's going on with this? The idea is that the headline was that they're going to buy 42,000 Bitcoin, or they're somehow going to acquire this. If you did all the math out, you know, regarding that asset value, how much a share represents of Bitcoin, you know, you would get something, and this is, I think, kind of what a lot of people were doing. I'm trying to pull this up right now. Yeah. So, I mean, that would have given them a net asset value of 42,000 at the current market price of Bitcoin, about 3.9 billion, right? And if you did it all out, you know, Bitcoin per share, you're going to get something along the lines of $320 of Bitcoin that was selling at 32 bucks. And this was pushing this thing up. And the actual news came out that they only have 2.7% exposure to that 42,000 Bitcoin. And that obviously crushes a ton of stuff. You know, so I mean, when you're talking about a fair value, or just, you know, like a flat net asset value, price per share for SEP should be about 1023. You know, the multiple, you know, at this level of like a 2.6 multiple is pretty nuts, I think, for Bitcoin. MicroStrategies is not even trading at a 2.6 multiple, okay? They're 2.06, and in my opinion, I think that multiple actually comes down when you get more competition. So we'll talk some more about that when we get off with Tim Ord. Stay right there, folks. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. It is a Thursday. Well, it feels like this week has gone on for quite a while. Let's go over right now. Of course, on Tuesdays and Thursdays, we are joined by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Check out his newsletter. Check out his book. Of course, we've really enjoyed having Tim on through all of this chop, getting some good kind of insight into everything going on. Tim, how are you doing? Listen, look, the SPY, right? I mean, we're up 1.85, reaching some of those gaps, but on very light volume. What are you seeing?
Right. Yeah, we're probably going to find resistance here. This thing's, you can see my screen, right?
Give me a second. We're going to get that up. I think that the producer's working on it now.
So we don't have it right now?
It's not live, I don't think, in the den at least. There we go. We're good now.
All right. This is the ARMS index. Actually, the top window, you can probably see my little,
yes,
red dot there. Anyhow, 10 days, it's that 0.69, which is basically neutral. And I do a 5-day, that's 1.14. We have a 2-day, 1.16, and down at the bottom we have a 1.13. The most important one is the 10-day. The 10-day, you should get up around 1.2, and that shows panic. And there's really no panic in the market per se. 10-day average is basically 2 weeks of panic. And 2 weeks panic can really produce a decent rally that could last at least weeks, if not months. So there's really nothing here for the intermediate term suggests this rally is going to continue. So I think we're going to probably find some resistance basically at the previous highs, which we'll get there. Okay, this is kind of developing here. There's a lot of different things to look at. You know, the previous chart looked at the trend as a way of forming panic. Panic only forms at bottoms. And the top window here is the McClellan oscillator. It's NYSE McClellan oscillator. And it's coming off of a low we had here a few days ago. But I pointed out the times when this McClellan oscillator goes from basically minus 300 up to plus 200. And if you kind of draw the line down there, that comes in, looks like about this vicinity, probably picked out this rally here. Then we had another one. Anyhow, this is the 2022 low, and the McClellan oscillator hit two bullish signals. That's going from minus 300 to plus 200 within 30 days. Here's kind of the formula for it right here. Actually, let me get down here to, they're not going to let me do it. So anyhow, we basically hit minus 200 here I don't know, a couple of weeks ago. And it's almost at 200 or plus 200 right now. We're actually 1.66. And this is yesterday's reading. So we may push up probably to plus 300 or plus 200 this week. So it went from basically minus 300 to plus 200 within 30 days. So I'm thinking we're in the process of building a base. And also the one indicator I kind of developed works pretty good. It's a 5-day average of the advanced decline, which is the bottom window. It has to go from 0.7 to 3.0 within 21 days. We had one starting in April. We're still kind of high, so there's kind of advanced decline. But we may go back down one more time and get another bullish reading on the advanced decline going from 0.7 to 3 within 21 days. So if you get a couple of them, you're getting a cluster of base building type indicators. Mm-hmm. So I don't think we actually found the final bottom yet, but we're in a basing problem. So I don't think there's another big leg down starting. I think at worst case, we're probably going to test the previous low. Okay, how we get... For some reason, I'm going to...
Do you need me to pull up the chart for you?
No, I'm trying to get down to the second chart, and it's not letting me do it.
Give me 1 second here.
And I don't know why.
Well, here, what I can do, if you're able to pull it up on another screen. You got it?
Yeah, I got it. I'm going to switch this over to Highlander here. Yeah, it kind of froze up on me for some reason. All right. Here's the S&Ps now. This is early today. We're basically right here. If you see that, I think we're going to go basically test this high, which is basically the April 9th high. That volume that day which is right here, which was 241 million shares. To get through that high, for this market to keep going, you have to break that high on at least equal volume. And so we're not going to do that. This is intraday here. We're lucky to break yesterday's volumes, but we're way low. So we're not going to break that high. That high is going to be resistance. So if we can't take out the previous high, what the market does is, well, if we can't take out the previous high, we'll attempt to take out the previous low. Well, there is a low right here, but most likely high and low of this range right here, we're probably going to go all the way back down to this low. And I think we may break that low and take a shot at this low. This low here will determine, in my opinion, that's where the next low is going to be. We'll probably break it a little bit, but as long as on this pullback, we get the trend readings way up to around 1.2 or higher, and this pullback may take a couple of weeks or longer. And I think that's where the bottom's going to come in. The bottom's going to come in this vicinity down here, somewhere probably below this low a little bit, but not much. So that's where the bottom's going to be. And you should see a lot of panic, bad news on whatever, the market and how bad it is and all this other stuff. Those are the type of things you want to buy. So when there's fear out there, that's good. When there's no fear, that's bad. So that's what I'm looking for. So I'm thinking we're topping. We're awful close to a top in this vicinity of some sort. Yeah. It may stop here, try to rally a little bit, but I think we're going to probably come back down and go to the probably in May sometime, because that's not too far away. Sure. And but that's what it looks like. And here's the 10-day or the 21-day trend at the bottom here, which comes in 106, which is neutral. Next one up is the 10-day trend, 0.6. I expect both those trend readings, 21-day and the 10-day, to get up around 1.2. And if it does, that gives quite a bit of information that we got enough fear in the market to have a decent rally. But from 550 down to I think it's 493 range. Yeah. That's a heck of a drop. It is. Will I get a clear signal on that top? Not sure yet. So I take clear. The best signals for my system come at bottoms. Tops are not as clear. So we'll see how that happens. If I do end up a decent sell signal, I'll issue it. If not, I'll wait for the next pullback. So, but that's a heck of it. I think it's about a 15% drop.
Yes,
if I'm not mistaken, somewhere in that vicinity. Because when we traded this from there to there was 9.5%. So we're probably talking 15% drop. So we'll see how that works out. So this rally is going on right now. It's not going to continue. We don't have the energy to the upside far as volume goes. Advanced clients showing some promise. McCall and Oscar showing some promise, but nothing. We're going to end this rally pretty quick.
Understood. Yeah, I have some similar sentiments on this movement to the upside. I know we have gold up next, but Tim, we have some questions about the Zwag breadth thrust indicator when you get back, if you wouldn't mind going over something. All right. Yeah, folks, stay right there. We'll be right back with Tim Ord after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. We're joined right now by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Tim, before we went to the break, We had some people send me a picture, right? And this is, people were saying the Zweig breadth thrust indicator was triggered today. And curious if you had any input on that, if you're seeing that as well.
I haven't checked it. I normally keep an eye on it. I don't have that right in front of me, but these two indicators. That's the reason I went back to this chart.
Yeah.
This one on the bottom did trigger a couple of weeks ago, and this is probably going to trigger, if not today, probably tomorrow, as far as McCullen Oscillator. And the Zweig, I checked it yesterday. It wasn't close, but if it does, that adds fuel to the bobbing process, because the Zweig breadth thrust indicator don't trigger unless it's unless there's a bull market forming. So that's the reason why I'm thinking worst case scenario is a April 7th test.
Sure.
And that's going to form the bottom. So I'll look at the Zweig breadth thrust indicator tonight just to verify that, and we'll cover that. I'll show that on next Tuesday's show. But,
perfect. Yeah.
I didn't. It could be. Yesterday I didn't see it, but maybe today it did. I know it's Advanced Klein, because of this indicator right here. It's pretty strong. We're at 4.0 on this on a 5 day. So there is Advanced Klein wise. This market is pretty strong. So, but anyhow, I'll check it tomorrow.
Perfect deal. So
right.
I mean, in the event that it is triggered, I mean, as you said, it can potentially reinforce that theory of a pullback, right?
Yeah,
down to those levels.
Right. You want to give as much confidence as you get once you start throwing money at something. You don't want to guess. So if you get more indicators saying that you're probably right on the direction of the market, the more safe, I guess, you might feel. So usually, I really don't talk to people about the market because whatever they feel is what the news is projecting to them, and usually they're on the opposite side of how I'm looking at the market. So I usually don't convince my methods on anybody, because usually I'm buying when everybody else is selling, and I'm pretty much selling or they're close to it whenever everybody else is buying. And you really got to stay in that direction to make money in the market. So anyhow, but yeah, it's good. It's I think the market's definitely turning more bullish here. So we'll see how this, I think this May 7th low will look once we get there. So, which is a couple weeks away. We'll see how that develops.
Sure.
Let's look at the gold market. This is, I think, where to be over the next several years. This is kind of a repeat. It's updated today. The bottom window is the GDX up-down volume. That's the cumulative. And this is a monthly chart. So this is actually making higher highs, higher lows. Same with the monthly advanced decline GDX cumulative. It's making higher highs, higher lows. As long as those two indicators stays above the mid Bollinger Band, we're in an uptrend. This is a monthly chart. You can have pullbacks on a daily basis, but as long as the monthlies remain bullish, you should buy the pullbacks. So this is a bull move. So it's not where, in my opinion, anywhere near ending. So trends up. We did sell our long position. The reason why on GDX is once you get about 80% above the upper Bollinger Band on the monthly time frame. So this is a monthly. So, and we sold around the 50 range, give or take. So I wanted, we're starting to back off already here. This is today's trading, but if you can see here, this is about 100% above the upper Bollinger Band. This is about 80%, give or take. And this one looks like about 80%. This one at one time was about 90% above the upper Bollinger Band. It's starting to back off now. But we got major support around 39, which actually happens to be where this trend line lies. So that's where I'm heading for. RSI on a couple of those monthly RSIs got up around 70. Kind of confirms that you're making some sort of a worthwhile high here.
Sure.
So nothing significant, just a pullback and an uptrend. Here's 3 drives to the top pattern. We talked about it on your movie or on your show. Anyhow, describe is the whole key of this pattern, this 3 drives to top pattern, is what happens on the second high. It has to have increased volume to the downside, and also has to retrace at least 6.18% of the previous up move. And that happened here. You can see the 68-point retracement did more than that. And you can see how the volume really picked up here on that decline. So that was your warning sign that the market was going to pull back. Then we had a surge to the upside, and we sold out right at the 50 range, went up a little bit higher, but we're starting to pull back now. 3 drives top patterns have according to the books, is a timeout in an uptrend. They're usually not topping patterns. They pull back down to where the pattern began, which happens to be 39. Then from there, we start moving up again. And there's a lot of confirmation on the longer-term charts suggests that this is what the next really good buy signal will be around this vicinity on 39.
I see.
So that's what I'll be looking for. This is a bigger chart. This chart goes back to 2012. There's a breakout line there. This is HUI, but this is a weekly HUI ratio. It basically it's when basically what this chart says. Gold stocks are cheap compared to the metal of gold. So when the ratio gets up around 0.17 or higher, you're usually at a high. These are some of the highs over the last decade or better going back. And when this ratio is below 0.12, where I think we're 0.12 right now. Yeah, there it is. It's kind of hard to draw. Anyhow, this is a good buy, and that's all the pink areas.
Yep.
So every time this pink area, it was a good buy, and this kind of shows you where it was. And the blue areas, when the ratio got too high at 0.17 or higher, that's all the blue areas. So we're still in the pink area, or right at it. So in general, on the bigger time frames, this is still a good buy. In previous, we had one in 2022, we had another in 2024, and we've basically been in the pink area since basically late last year, and we're basically still in it. So we're still at a buy signal as far as cheapness goes compared to gold stocks to gold. So even though we broke out, this ratio still remained low. So it hasn't really rallied yet per se. So that's the reason why I think we're going to go on to the upside for a while. How high? We could discuss this chart. We got time.
Yeah, absolutely. And then someone has a question as well on maybe thoughts on silver. So if you stay right there, Tim, we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Schuper, joined right now by Tim Ord of the Ord Oracle. Tim, before we went to the break, we were taking a look at the monthly HUI NDX.
Yep. This chart, it's really interesting. Actually, this low right here almost perfectly touched this low back here.
Yeah.
I mean, it came right down, stopped right at it, turned right back up. But anyhow, this chart is the monthly HUI NDX ratio, and goes back to well, it started, it looks like about 1995. So you can see what happened here. It appears to be a 12-year cycle where the equity market outperforms gold, and the next 12 years gold stocks outperform the equity market. And how you define that is the RSI. So when this ratio is rising, HUI is outperforming the NDX or QQQ or NASDAQ. And when it's declining, then NDX is outperforming the gold stocks. So gold stocks really took a beating from 2012, even though we had some bounces along the way. Gold stocks in general worked lower all the way into 2024 compared to the price of NDX. But what happens here, if you notice, when you get above, I did the RSI of this ratio. So this is a monthly RSI on the HUI NDX ratio. And if you notice, when this trend is going up, the RSI basically stays above 50. And when it's going down, it's basically, when this ratio is going down, the RSI stays below 50. So that's the reason why I highlighted that. So this, except for that one area right here, had a little dip there, but it came right back to 50 again, above 50, and kept on going. So we could try to get it above 50 a couple of different times over since 2012, but really didn't do it until right now. We're basically 62.63 right now, so we're way above 50. And so this is initiation of an uptrend. You got to have a sign of weakness off of a high, which is identified with the RSI falling way below 50, or you can have the other way, a sign of strength off of a low on the RSI, which is a reading way above 50. So we got it way above 50. So we're starting a new trend up to the upside according to this ratio. How high the ratio will go, don't know. But I think it may last 12 years. Something similar we had from 2000 to 2012. The gold market just outperformed the NASDAQ in a big way.
Yeah.
And I'm thinking we're probably going to start that and rally for, you know, I got different indicators say we rally into 2027 as a cycle one. But in general, I think we're just going to keep going for a while. So this is... you know, gold stocks, if you look at them, there's a lot of penny stocks in the gold stocks.
Yeah.
They're all over the place. And I think a lot of those penny stocks may turn into, you know, $10, $20, $30, some of them. So we'll have to wait and see if that happens or not. But I think we're in the early stages of a major move up. And at the moment, I don't see any signs, worthwhile signs, of a top of any consequence other than a pullback in 39 to GDX, which I think will be a major buying opportunity because I think we're still in the early stages of this bull market. And we'll be able to tell as things go along if this ratio starts to turn down and falls way below 50, it'll be a clue that, okay, it ended. But we're not anywhere close to that. We're still in the rising stage here. So I think there's a big there was a lot of millionaires made in 2000 when this bull market started off in the gold issues, and a lot of those penny stocks turned into $10, $20, $30 stocks. So I'm thinking this is a good chance this time around this may happen. So, but we'll play the numbers as they come along. But I'll be watching this indicator. You don't have to watch it every day, but to me, we're in the early stages of a massive bull market.
No, this is a really interesting ratio, actually.
Yeah. You measure the energy of this ratio. So you're comparing the HUI, which is basically a gold bug stock. Yeah. So there's two different indexes here, and you're measuring the acceleration between one to the other. That's what the RSI does. So I think NASDAQ it can go up too.
Sure.
I'm saying HUI will go up faster.
Yeah, it's relative, right?
Relative. So that's the reason why this RSI, I think, is probably going to stay at 50 and higher for a while. So we'll see how long that while lasts. But once it starts falling below 50, say we get down to 40 or 45 or something, that'd be a big warning. And I'll point that out if time comes forward. But right now, I don't see anything happening other than, I don't know what gold's going to do. Gold may keep going up, but I think gold's actually going to slow down, and gold stocks going to increase because I do have a ratio between the XAU and gold ratio also, and I see no signs of anywhere near signs of. So these gold stocks are probably going to start rallying. They're just going to kind of keep creeping up until everybody realizes that maybe 5-6 years down the road that gold stocks have been a good investment.
Right.
By that time, the rally's half over. So, but nobody's paying attention to it right now. So that's good.
Yeah. No, definitely. No, that's a really interesting ratio. Huh.
Yeah. So it's something to watch. You could put to the SPX too, but for some reason at NASDAQ kind of leads the S&Ps. In bull markets, you want the QQQs to outperform the SPYs. That's what happens in the bull markets. And right now, I think last time I looked at the ratio, it's been a couple of weeks. NASDAQ is way underperforming the SPY, so that's kind of a sign. But I still think second half of the year will be a good year, but we may be starting a huge trading range, is what I'm thinking. So we'll see how it develops. But I think this year, I think that the great buy will be the April, getting back to the equity market, I think the great buy will be the April 7th low vicinity, and we go back up, probably break the previous high of March or April 9th, which is up around that 550 area. We may break that a little bit, and that's where all the big gains will be being. But I don't think we'll keep breaking to new highs later on. So, this will be the fourth or fifth year in a row we'll be outperforming the market, and so far we have this year, even though it did take a big hit off of that January high or February high, wherever it was. So we'll see how it happens. But the gold market, I think, is where the serious money is going to be made.
Totally.
Or gold stocks. Gold will do well, but not as well as the gold stocks. So we'll see how it develops.
Awesome deal. No, seriously. And you're talking about, outperforming. I mean, folks, you can go to ord-oracle.com, check out his newsletter. Really recommend doing that. Tim, we had a question. I know we don't usually look at too much silver when we're on here. You shared this, I think it was the silver to GLD ratio, maybe a little while ago. We're not really seeing silver move with gold in that exact way,
Yep, but I'm thinking that's what's going to occur next. That's a good point. Basically, anything precious metals, put it that way, are going to perform. But silver, I think, is just starting to turn the corner to the upside.
Okay. Maybe we can talk about that Tuesday if you want to, but regardless, looking forward to talking to you Tuesday. Tim, thank you so much for coming on.
All right, thank you.
Take care. Folks, stay right there. We'll be right back for a short segment after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You're watching The Tom O'Brien Show. We just have a short segment left. Take a look at the spot, trading up 2.17% at 547.18. Composite trading up 2.77% at 17,166. You get the Dow Jones Industrial cresting 40,000, trading up 537 points for the day, up 1.36%. The Russell doing well, too, up 2.09. Again, if you're someone who takes volume in account with price movement, you have a lot of very low volume right now. We were seeing that kind of with the run up. The past few trading sessions. So, I mean, for me personally, a lot of this is headline driven. A lot of this is Trump driven. I think there are some, there were some problems with liquidity markets. 10-year Treasury still at 4.3. The fact that you have things like Tesla just still up 3.08% after like pretty bad earnings. You know, it just doesn't, I don't know, I'm just not confident with this movement to the upside, you know? And again, we've seen days like this. You know, I mean, that's something to really keep in mind. Like we have seen a few days like this where you just get some gnarly movement to the upside. There have been some okay headlines recently, right? But you know, we're going to start seeing like the real impacts of kind of some of these economic policies in this quarter. You know, I don't think it's really clear that Trump has reached a deal with China or is even talking to them. Uncertainty still prevails, right? So, and then we have Google after, and who knows what's going to happen with that, right? I mean, here's the thing, you know, you get a bunch of ads from China that in theory they're not going to have anymore. And I've heard the things like, oh, well, American people will come in and start buying the ads. But listen, I mean, advertising goes down. The cost, spending on advertising goes down if you're in tight economic spots. For sure, for sure. So, you know, we'll see what happens with that. If this is negative, I think you can get a really tough day tomorrow. Folks, thank you so much for joining me today. I will see you 3 p.m. tomorrow. Take care.
Building